3, 2, 1. Event has occurred.
Morning, traders. Welcome to the TraderLab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube in the Bookmap Discord TraderLab chat? Thanks, Stephen. Let me get some screenage working here again. Okay, thanks. Yeah, well, good morning, everybody. Thanks for stopping by, visiting the TraderLab today. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap Order Flow tools with auction market theory using a volume profile in the intraday developing time frame. In addition, the stream is based on structured trades that are available to everyone in the Bookmap Discord TraderLab chat at no cost, as well as a library of webinars and a community. And unlike other communities where you must pay a subscription, there is absolutely no cost for you to participate in a serious, professionally minded community with traders looking to build out the business side of trading with an understanding of the business. The business of trading isn't about a video game. It's really about probabilities, in my opinion. At least that's been my experience. And in spite of our need psychologically to adhere to being right and all that emotional baggage that we bring to trading, the business of trading is not built around what we need. It's built about how gaming works. And if we can differentiate those psychological aspects and isolate ourselves from our emotions as much as we can and just do business, if you can take care of business and understand the business, you might have an opportunity to actually be in the business again. And of course, past performance not indicative of future results. Everybody's different, and no matter what you know or what you learn about trading doesn't mean you'll be able to do it. And that's where there's quite a differentiation from the fantasy of what trading is and what the reality of it is. And we have to accomplish and overcome a lot of obstacles. Many of them are self-imposed obstacles versus the mechanics of learning to trade. My personal belief is anybody can learn to trade. You come to TraderLab, I believe you can learn to trade. whether you will be able to trade, manage your emotional states, and do the work necessary to know where you have a statistical edge is a whole different issue. If you do the work, you'll know where the opportunity comes up if you actually do the work. Then the other aspect of this business is just seeing it just like the casinos do, extracting dollars from the other participants or the gamblers over a large sample size of random interactions. Not about predicting, not about being right. Again, it's more philosophical, but it's also practical, because we can't predict what the other participants will do in the market at any time. Doesn't matter. Neither can the casinos predict what the gamblers will do or the cards that will come out of the deck. Completely random. That is our business model. If we can link ourselves intellectually or psychologically to that business model, which works, obviously the casinos are doing pretty good, then maybe we can replicate and align ourselves with a successful process and then extrapolate that to the business of trading using a similar process. That's what TraderLab's built on. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is based on structured trades. There's 60 PDFs available to everyone at no cost, and there's a link in the bottom of YouTube if you're inclined. You want to take a look at those. And the idea of structured trades is to give you a template or a place you can start. Now, you can spend years trying to figure out, quote, setups, right? Well, the process of, quote, vetting is built on structure. Then what's so difficult, I believe, for retail traders is the thought of that they're going to take what somebody else does and now just plug and play. If it did that, and I mentioned this the other day, I got some comments about it, and it was, everybody agreed. It was, if that was the case, we'd write out our check for $10,000. We go sit in that 1 week or 1 weekend mega seminar, and then we'd all come home and we'd cart our ATMs down in the basement and off we go printing. What a fantasy. Wouldn't it be great if it was true? And obviously it's not. So we have to do something different. What is different? You got to integrate your psychology and your emotional triggers and management, if you will, into this mix. That is, I believe, other than replicating processes, and it's not replicating setups, it's understanding market mechanics. How does the market work? Why does it do what it does? How might you get an alignment? And the alignment is a function of fractals. A fractal is not a time frame. It is behavioral. In other words, price-based, participant-based behavior. Now, I'm going to show you some of these, and I always kind of do the same thing here in the stream, because the purpose of the stream is to help you see how the market works. If you understand how a process may develop, and it's always random, which is always the kicker, you know, literally and figuratively, then you might recognize and be able to quantify pieces or conditions, and then have I consider it like conditional processes. So it's like a branch logic. You know, if this, then that, then this happens. If this, then that. And if it doesn't happen, what does it mean? And it takes you on a branch. That branch is part of a decision-making tree. You can actually plot this out. This is what is about TraderLab. So I'm going to show you some stuff. And I'm going to start with the ETH. And this, I narrated this in the TraderLab. Remember, I don't call trades, but I do point out things to observe, because that's all it's good for. What is my job? My job is to coach. My job is to educate. My job is to point out market phenomena, not to call trades. And you might say, well, why don't you call trades? Well, I take stops just like you do. But if you can learn, you then may understand. So this is the report that came out at 7:30. By the way, if you have questions, please post them. I'll do my best to get back. I have limited time. And remember, these streams are available to everyone to reverse engineer, screenshot, and everything else, and review exclusively for TraderLab participants. And again, all this is at no cost. And all the resources in TraderLab, library of webinars, statistical probabilities of some things happening over the other, and a lot more. Amazing community, actually. And I want to thank all TraderLab participants who regularly contribute, participate, debate, and occasionally we have a good time. But the business of trading is serious business, so this is a serious community. So I know there's a lot of chats and other communities, out on the planet, more than I ever thought there could be. I forgot, this thing called the internet. Anybody can open their mouth and say they're a trader, show you some great something or other. It's all nonsense to me, but then again, I'm sure there's some value out there. You just might spend the rest of your life trying to find it. So in the meantime, TraderLab exists, serious traders, and a very diverse group, from newer traders to very seasoned traders. I'm going on 45 years. Our senior trader, I think, maybe has 54 years or something. I don't know. He won't talk about it anymore. So this is the report. Let's go take a look at what we get here. This liquidity comes into the book. This is buying, these green bubbles, and I just want you to see behavior. This is how Bookmap can help you. And again, Bookmap is a high-tier order flow tool, and depending on how you understand market mechanics, this takes us down really into like a micro level. But this is where I integrate, and I use auction market theory. I don't use any indicators. I'm not saying you can't. I'm saying I don't, because I want to be here. I don't want to be waiting for something, to do what, to do something. So been there, done that. So if you're doing that, and I'm not interested in curve fitting indicators to get me the exact, curve fit, the moving average, the trend line, moving it, all that nonsense that we've all done. Yes, we've all done it. If you're still doing it, I call that trader groundhog. So right here, we have the report, pullback, more buying comes in, and then right here, this liquidity comes into the book. Now, I put a line on this because I'm going to show you something about this. So I see selling icebergs go off, and here's my buyer. Now, this is delta. Right here, this is absorption. And that's basically showing me the iceberg. Okay, so I'm seeing a seller here. So it's passive. Icebergs are passive. I mean, they don't have to be. But when you see liquidity sitting in the book, it's really a limit order, and everybody sees it. So this guy here is selling. Okay, very nice. So what we want to see is the reaction to this. Buyers, boom. This is like hitting your head on a ceiling. Bang, bang. Buyers are here. So the way I look at this, and this is just concept, guys, by the way, let's look over here. This is the delta. 867 are sold here. This is what the delta is showing me. The delta is also showing me what's happening here. So these buyers, these guys right here, bang, 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 absorption, 867. Now, the 867 just, comprises market order and maybe buy stops. That's what's in the buy. The other side is the selling. They are being absorbed. Okay? So the longs are here. Now, here's the high volume right here. So all this volume is happening here. Very important. Because in the auction process, remember how auction works. And this is kind of where we talk fractals. You get down into minutia. But it's the fractals, the concept of a Russian doll, where they're little ones inside a bigger, 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 bigger as you go up the higher time frame. Well, what happened yesterday? Well, we did the Acapulco cliff dive yesterday. We couldn't get back into the previous day's range. We got to, where'd we go? The previous day's low. We filled the gap. We probed a little bit in, and then it was hasta la vista. We'll catch you next time. Closed towards the low, and then in the slightly extended, we fell out and became what is called a neutral extreme day. And in market profile world, that means potential continuation. And obviously, it's I don't know about obviously, but let's just say south of the border seems like the place to be leaning. Just maybe. Okay, not a recommendation. So back to the ETH. So this is where our absorption is. So we get our sellers. So I posted in the TraderLab a short. Let me show you. Here. Market comes back here. And I posted this and I said, observe this. And, and the target on the trade, so and I'm going to show you the target. Eventually, it didn't get there first shot, was this. This is a, quote, mean reversion trade. What is mean reversion? Well, first of all, we have this. You see the liquidity in the book. I see another iceberg up here. I have another iceberg here. I see again what happens here, absorption. So these buyers, it's like hitting your head on a wall. Now, the thing you don't know about this, and this part of the joy, is if this selling is done, and this pulls out of here, it opens it up. So that's, of course, like every trade we put on. It's like, maybe not. So anyway, so this is a short in TraderLab. Look what's going on here. So the trade gets risk neutral, okay? And this is, but that's not the most important part here. The most important part is understanding how you can read order flow and use a high tier tool like Bookmap and alignment with auction processes. Now we have, anyway, let me keep going here. And this is the target, okay? This is called mean reversion. It is a specific structured trade in the TraderLab. And like any trade in TraderLab or anywhere, anything can happen. So you have to do the following. You have a trade plan, your trade shows up, or whatever you have vetted, which means statistical edge. Then you put your helmet on, you put your trade on, and you manage your risk, and either it works or, hasta la vista. This is the target. So risk neutral, stop is up here, and now here's a couple choices now. And this is, and you can work this out in TraderLab. What do you do with this trade? Do you just sit here and your stop's up here and you order in breakfast, get your stack of pancakes, or do you actively manage the trade? And I only say that because this is what the job is of developing traders in TraderLab. So let's assume you do nothing. You would have a few Happy Meals. Maybe what they call them, those breakfast things. And you'd be taken out. Now, let's come back. This is the ETH high. This is the RTH open. Now, I want you to remember this location right here. This is the ETH high. There's a high probability, and all these statistics are available in TraderLab. I won't spend time with them today because I wanted to talk a little bit more about this behavior. You're going to see why it's important. This has a high probability. So let's talk about the opening trade. And by the way, if you have questions, drop them in there. If you're looking for those PDFs, there's the structured trades. There's 60 of them. You can download those. You need to go to TraderLab. There's a link in the bottom of YouTube. There's no cost to access the TraderLab and to join a community of serious traders. It's not romper room. It's really more about business. So if you're interested in business, then, So this is where, let's remember this. This is the RTH open. Now, I'm going to show you microstructure. This is just something. Now, so what do I know? I know 72, RTH open. There's my liquidity. Same guys are in here. ETH high. Okay. And this is the bottom of where that gap was that we had filled. This is a naked volume point of control that was a target from yesterday. Who knows with this stuff, but it was in here. Yesterday's low. So all this is in here. This was our target yesterday. We had two targets. We had one up on the top, the overnight mid, never got there. That's fine. Fell out. And this was the target. Yesterday's low is here, but that happened after, cash close. So, but I left it on here as a reference. So let's look at the open and how this all might come together. This is called the developing volume point of control. This is where the volume is. And as the market, and it starts at zero, so everything starts at zero. So it resets. So RTH open, no volume. And then as the volume comes in and the trade takes place, this is going to track where the highest volume is. So right here, I'm looking at this and I'm going, well, I got this. So I give it a little time because I can, and this is a very dangerous place to trade. I always tell traders, don't even think about it, narrate it. Because you're going to see where's the opening swing high? It's right here. If I get my early sellers, where's their stops going to be? Maybe here, and maybe up over here, which was a key level, right, in the ETH. So I know this. Watch the white line. So VPOC migration. This suggests higher. So right here, I'm going, okay, well, I don't want to get short here unless, of course, it comes under here. This is then a structured trade for me. But I have to be conscious of this and this. So I'm just telling you, this is kind of the thought process. So I have to wait. And here's another thing to write this down. If the market sold off yesterday and you were short coming in today and you get a lower open, might you take some profits? Just asking. So that brings in something called responsive buying. And let's see, and it's supported by VPOC migration. I'm going to label this. I call this a variable high volume node. And all I'm doing, very simple. By the way, is trading complicated? Only if you want it to be. What trading is random. That is where that is the crux of the problem, if you will. Casinos operate in a random environment too. How do they deal with that? How about this? Statistics is what takes randomness and quantifies it. When you're in a random environment and you have nothing other than maybe with nothing to substantiate that you actually have an edge, you are going to be then controlled by your emotional state because you have not been able, you can't manage your emotional state with air. You have to, in my opinion, again, manage it with statistics because now something that's intangible, like randomness, which is not something you can get your arms around other than trying to accept it. If you can create statistics, now you have probabilities, and probabilities are tangible. That's why the casinos don't change the games, don't skip the next hand, all the things we do, because we have no idea what's going on, because we have no edge, because we don't know where it is. Casinos know where their edge is. So here we go. This is our key location. This is where the stops were going to be. Notice we have 3,000 sell stops going off here. Hello? Now this right here, and I think I posted this and I can't remember because I'm busy in the morning, if you know what I'm saying. Here's your buyer. This is 3,000 sell eyes. That's a huge iceberg order. Now, what can happen is when this is done and this liquidity pulls, this is gone, then it opens the door and the market can now move higher. So then what we have to see is at this, and we have a statistic or ETH high probability target. The statistics are available for you guys to purview in the Bookmap Discord TraderLab chat. So for me, no longs, short only. So where's my short going to be? Up here. What do I see here? Liquidity come in the book. Let's watch. This is microstructure right here. There's the liquidity. Do you notice liquidity, huge seller, liquidity gone, lid off the pot, pop, liquidity comes back in the book. Now, I don't, right here, I'm looking at it, and just like you, I'm going to go, what's going on? I want to get short. Developing volume point of control is here. This is, let's look what it says. Too low, boom. Too low, going to the moon, Alice, except we want to be short. Context. So now let's go to fractal. Now, right here, nobody knows, and especially me. Because if you ever ask me, you say, well, what do you think? I'm going to say, I don't know. I suspect. I do not know. I cannot know. So if you know you don't know, best you got is maybe. Write that down. You don't know. If you put your mental state in a place of needing to be right and knowing, that's ego. Has nothing to do with this business. You know, ego's wonderful. Can't afford it here. So this here, this little structure right here, that high volume, that is a fractal. And what it is, now we don't know. This is high volume in a developing time frame. This little thing in here, high volume. Come back here, too low. High volume. You can see it all over the place, right? So when I see it, you know, I'm going, oh, that's nice. Okay. What about this? It could just as well keep going, except here's the change. I'm spending a little time. I want you to see it. So right here, I'm looking at it, and it could just, you know, right? This could pull. This is all part of the joy. But let's look at the difference. I get my seller. This now might be too high. There's the retail price in the fractal, right there. This is a consolidation. There's the high volume in the consolidation. If this says it's too low and this is now retail and maybe too low, this is the same behavior in a fractal saying it might be too high. When I break away from it, that right here is too high. Alignment, liquidity. Remember the pieces. Now let's look forward here. Now, where are we? We're back here under this liquidity. So right here, the pullback to this, there's a structured trade in TraderLab. I'm going to show you a micro aspect, which I cannot act on. You know, I'm still working on that. I don't know what's going on, except I know this is key in this. When it breaks low, that sets up a micro trigger for a short. Now, right in here, if it pulls back here, and this is where the volume is, right here. So this is a potential short, but not yet because of this. We break below it. Now I have crossed below it and I test it from below. It's a short. This is a short. Now let me show you this. Let's look at the concept. The volume is here. We break below it. We come back to it. It is a short, which it's not. I'm saying structurally. What do we do in the next higher time frame? We break below it. We come back and check it. It is a short. High volume is here. We break below it. We come back and check it. It's a antenna up warning Will Robinson moment. I have this. I break below that, which is the same as breaking below this, except now I'm doing it in the next higher developing time frame. That's my short. I know. Did it take too long for me to explain it, or is this useful? Let me know. Oh, By the way, if you guys are interested in this, and how we doing in YouTube? By the way, YouTube, there's a link in the bottom of YouTube. If you, and that'll bring you to the Bookmap Discord TraderLab chat. There's 60 PDFs of these structured trades, and an understanding of how the market works is what the whole point of the TraderLab is, in the sense of giving you these basic processes so you understand it. Then you've got to deconstruct it and put it back together to fit your psychology. That's why you cannot plug and play and go to these chat rooms with these gurus who say, do what I do. And then if it worked, we'd all find the right one. I'd hang out with you, believe me. You know, I've been doing this going on 45 years. What would you have paid? I will tell you, in real money, I would have paid anything to not to go through what I went through, especially since it took so much longer than I thought, because I had no clue. You know, you don't know what you don't know until you know. So this is your short. Now, where are we trying to go? What was it? What was the first trade? Mean reversion. Where's that? Overnight VPOC. Where am I going to go now? This is my target. Here. So this trade is a short from here to here. This is TraderLab trading, okay? Now there's more, and this has a high probability of getting checked. And again, that's all available in the Bookmap Discord TraderLab chat. And by the way, guys, there's a library of webinars in there. I mean, up to 4.5 hours long of real-time narration. You know, here I'm going over what happened because it lays a foundation of understanding. I'm not here really, to entertain you. I'm really here to educate you. So we pull back to mid and VWAP. Now here's the next piece. Let me keep track of what I'm doing here before I forget. Variable high volume node, variable high volume node, variable high volume node. So where's my next level? Mid VWAP, and where's my next level? Overnight mid and then lower. And let me just see where I am here. So this is a TraderLab's short right here. And I want you to show you how this works. Think of this like shopping. So that's too high. And it was like, maybe. You feel lucky, as Dirty Harry says, you would sell this. Me, not so much. I sell this. I'm okay with that. Notice the behavior here. The way I think of these things, and I'm not saying it's good, bad, indifferent. I don't know anything about it. This was too low. This is too low. If I get short here, I can be scaling there or there. Target is right at this line here. So that's the trade. Now we come back across to where? Now, if this is retail, let's try to think about how this might work. And this is too high, and this is now the new price. So what you have is shopping. Too low, too high. Okay. Now the price is lower. This is too high. Okay. What else do we know? We're below this price. Is this price now unfair? Is it too high? I come up right here. It's too high. Break. So if this is in your plan, I'm not saying it should be, you're either staying short and you're hanging out, or you can actually operate. Let me put the cursor over here. Here. Test. Now this is micro. It might not be your thing, but I want you to see just how the pieces might align. See the selling. This is now retail. So this is called mean reversion. The outside in trading is mean reversion. So what we're trying to do now is if we come out, we want to get short. There's no longs in here, at least not for me. Others, maybe. Don't know. Notice what was too high. Let's just watch. What was too high? Variable high volume node. Too high. Short to here. Now, if this isn't enough range, it's not qualified for you. This is subject to skill. Another way to play this is, if it comes back here, is to observe it and see what the behavior is here. So I don't know. So this one here, you can't operate in the range. You got nothing to do here. You see it's two-sided, but what's important? What was important about this? 3,000 icebergs. This is the same location the selling happened at right after the report. And other than this, which was the overnight high for the short, this was the short. What's this? Short. To where? Next target. Overnight mid. And IB low. There's another stat in here, this thing. This. So this, we'd be looking for this area at least. And if we take this out, then there's a high probability we're going to take this out at 9:30, which means this. This, actually, I'm jumping ahead here a little bit. So this is a short to here, and then you're going for either overnight mid or wherever, up to your trade plan. We pull back to here, to VWAP. It's set, and this sets up another potential short, mid, VWAP right here, and you're still going for this. Come under here. All good. Now what? We pull back. Now this trade was tricky. This one was annoying. Let me show you this one. This is called the IB continuation trade. Now there's two ways to look at this thing. Now there's only shorts for me in this configuration, so I'm only going to sell it. Somebody else wants to buy it, that's their business, that's okay. I just kind of go with what I perceive to be the path of least resistance. So longs for me are trade management opportunities. And when I say for me, I'm talking about TraderLab structured trades. So in the TraderLab, now every trader develops their own thing. Don't get me wrong. It's not this is the way it must be done. Absolutely not. The way to be done is to learn to understand, to read it, and then carve out your niche, whatever it is. And that's really a function of time frame or fractal. I don't use the clock, so for me, I never think of time. I just think of behavior. So coming down here, so now we have two possibilities in here. Once we come out under 9:30, we take out this low, the first hour's low. This is called the initial balance low. It sets up two possibilities. One is retracement, pullback, and a continuation trade. So it would be a short going for this. And I think there's a little more down here somewhere. Well, out here, but who knows? I think it's out there. So this is a short in here. Let's look at it. Comes up. Now, so you understand, this is a distribution. This is called, I'm looking to sell for a continuation down to here. This is the target. Now, this is a distribution. What a distribution is really just a consolidation, and what it's doing is when the market is rotating, it, rotates around, and that creates your consolidation. My outside edge of this consolidation, this is called the low volume node. And all it is, without getting carried away, it's an outside edge of volume. And outside edges have buy stops above, and on the other side, we will have sell stops underneath. So when I'm looking at this trade to get short, I also have to be looking over here and go, well, it can come above the last swing. So I have to be conscious of this stuff. Just saying, consciousness is useful. So here, this is too high. My outside edge is out here. Look to the right, you'll see the low volume node. So it's here. So if I get short, which would be in here, I have to be conscious that this volume here, which is out here is too high, and then this is an outside edge over in here. And this is the overnight volume point of control. I want to be under all of this. So this here, I'm looking for the short, okay? Took a short here, just saying. And not so much. So now it comes back. Let's look. Now right here, I mean, this is just the way it is, you know? So that trade went to the happy hunting ground. Now, so here I have a VPOC migration. Right here, I'm looking at, I have this variable high volume node and I have this. So now I'm back inside the IB, which is the initial balance. And I know right here, if it's going to go down, it's got to stay under this location right here. That's what I know. And I'm still bearish. So I'm still looking for shorts. Now, so I haven't seen any of this. And also the last trade, you know, did not happen. I mean, it happened, but it didn't work out. Okay. So now what? Let's look. So right here, this is too high. This is retail. It needs to stay under here. If we cross, then this is resistance, this high volume right here. And I see we're current. And then I'll look at your question. So let's watch the behavior. This is like a moment of like what's happening. So right here, this is either too high and we're going to push off, but it'll resolve right here. And this sets up, right here is a potential short. It's not a recommendation. We are in balance. The market can do, right here, it's basically, if you're going to take a trade, you know where you fail. It's right here. And it would be a short. It's not a recommendation. And you're looking to come here and wherever. So let's see what it does. And guys, I don't call trades. I'm like everybody else. I've got the tire tracks on my back to prove it. Part of trading is randomness. So in the TraderLab, let's look at the language. This is too high. This might be too low. We come back, and what you have is a high volume here. Market will chop in high volume. What you'd be looking for here is this price too high or is this price too low? Trend is down. So if this price is too high and we can stay below it and get below this, then we can come here. This is a structured trade. We'll see what it does. It's not a recommendation, guys. And I encourage you not, this is, give you an idea. When you understand market mechanics, you would be waiting for this location. You would then be using Bookmap for triggering. If it's part of your plan. Again, I'm always going to say if, because there's some traders who are going to be out to lunch, literally. And there's other traders who might be sitting long, who knows. And there's other traders who will not trade here, which is also fine also, unless you have a plan for it. I'm under yesterday's low. And this is at the moment too high. So we will resolve here. This might be too low. This might be too high. If this is too low, we're going to take this out. If this is too high, we're going to break under here. That is it. This is like a sandbox. So we have to see what's going to happen here. In the meantime, if you're interested, I got a question about those 60 PDFs of structured trades. The link in the bottom of YouTube is the way to access that, as well as the library of webinars in the community and the TraderLab. And there's no cost, So that's available to all you guys for visiting. How are we doing in YouTube? By the way, if you're finding this interesting and you're getting something from this, please give a thumb up. Consider that a token of your appreciation for what Bookmap offers you at no cost. I think it's amazing because everybody You know, how many chat rooms have you guys been in your career, in your developing career, and how much have you paid for that privilege? And then again, what have you walked away that's actually usable? That's the other thing. I know the logic always says, well, at least I'll get something out of it. Well, if you really, or do you get something that just sets you back versus moving you forward? That's part of what TraderLab community is about, is the leverage of the collective experience of the participants. Okay, so we're right up at our level here. And if the market's going lower, it needs to hold this. Otherwise, the idea of the short will be off the table. Now that short's off the table now. Okay, so for me, there's nothing left to do here now. This. We still have this out here, which is material. So I think this is pretty important. This high volume right here, this is where all that iceberg behavior was, and the original short up here from earlier. So that's about it. So now for me, I just kind of go in the park. I don't have a trade here. So, I mean, if you can operate in tight time frames, you can scalp in this, but I don't advocate scalping. I think it's a great way to have your broker, come to your house and give you a personal hug and say thanks for sending the kids to camp. This is still a location to observe. Let's just see it. See, this is where it would go. So, and it has to clear this to continue lower. So we'll just watch it. These are not trade recommendations. There's micro high volume, but we are moving a little outside of this. That could set up a return up in here. So we just have to be conscious. This is very aggressive. This would not be anything I would do. See how now we got algos in here. You got to understand the environment we're in. Because these guys can be here, you'll see buying, and then they can pull and flip and push the market down. You don't know what the intent is of this. So we're above here. That sets this next level up, and maybe out here. This is a low volume node. Let me bring this in so you can see what this is about. See if I can see this. Iceberg, liquidity. These sellers were absorbed by this guy. We've got icebergs on both sides now. This is a location. I have nothing in here, in other words, from a structured point of view, this can go. Let's look at some targeting. Right now, the high of the day is here, and that was where we set up our short, which was right here, I think. Some 72-ish. So we can come out and rotate. The current condition to the market, unless we blast off and take out this high, is something called mean reversion. Mean reversion, besides being mean, is outside in trading. If this is the mean, which means the retail price, and the way the market works, or the auction, is to try to figure out what's too high. And it's almost like when you go to a store and they keep raising the price, well, somebody may pay it, but at some point, if the price is too high, the volume is going to dry up. In other words, drop off. And it creates something that looks like this. Market can move, but there's less buyers. It's like if the price is high, you go to the store, you got to have the pint of ice cream Saturday night. It's $6 a pint. You gag, but you want it. You pay it, but there's less volume. Then if the sellers of ice cream or whatever want to do more business, they've got to lower the price back to where the high volume takes place, because that's retail, where everybody pays, the fair price for the pint of ice cream. So the market will go as high as it needs to go to run out of buyers. And if we run out of buyers, that attracts sellers. The sellers are attracted then to lower the price to find a buyer. And that creates our rotation. At the moment, this is the retail price. So theoretically, and that's what I'm going to target. It's the theory, auction market theory. At wherever this pricing might be unfair, we can then potentially come back here. Now, there's another part to this. If we do a lot of volume up here, basically then more volume means, this is the going price. You want ice cream, you're going to pay this, and then this will move. So it's dynamic. So here we have sellers, and they're being absorbed by the buyers here. So buying iceberg, selling iceberg. So we want to watch the levels, and that's all these are. Auction creates levels, behavior, And if a price is too high, and we don't know quite any of this, it's just locations of behavior, then we want to see is what was once too high, just like support and resistance, is this still too high? What happens when we come back here? Right now, that's retail. So what I'm looking for is outside in at the moment, unless it just keeps marching north, and then I'm never going to get a short, So let's see what it does. So what I know is buying here, sellers absorbing the buyers. That's a warning Will Robinson moment. Be conscious that these guys are being absorbed. Now, the thing about absorption, so is if there's absorption, does that mean the buyers are more aggressive? Yes, at the moment. And they're taking these sellers and absorbing. That's what it says. And if they're still marching higher, that means that there's more appetite by the buyers, and the sellers are kind of losing out here. They're selling, the buyers are still saying, give me more. But what happens if we run out of the buyers? Then what happens? There. So this is called mean reversion. And where's my location? See that? So what I'm doing with the auction, and I'm using the term attempting to do, is anticipate in order to participate. If I understand how the market works, then I anticipate it coming here. Doesn't mean it will. It's not a trade recommendation. It's behavior. It's no different than this. This location here to here, right? This location here to here. Well, where did we go? We went up to the next location here, and where are we looking to go? To here. Can you guys see the rationale and the logic? Hey, Trader. Yeah, hi. Thanks. And everybody in YouTube, thanks so much for visiting TraderLab today. Let me get this out of the way here. The fact there's a lot of stops at the low of the day, I don't know what to make of that. I mean, it could be, I can't deduce what it means. If we never return there, then it was maybe an extreme of behavior. I can't predict anything. What I know is where behavior takes place, and then I want to see what happens if we come back to it. So these buyers got absorbed. So there were sellers in here. Again, we don't know. Do we just keep going? Maybe. But once we run out of, once I don't see any buyers up here, and there's my liquidity, buyers are here, my volume is right in here, this sets up a return to here. This is the mean reversion. That's what this is. Now, what does that mean? It means that if there's enough range and you have a vetted trade plan for mean reversion trading, and the range is there, because this is your primary target, this. So if you get, wherever you get short, you got to get scaled ahead of this. I usually give it 2 ticks. So can I enter not here. Where can I enter? And if I don't have an entry, I can't take the trade. But I will tell you this, there's two locations for the entry, here and here. So, it's up to you. When I mean you, I mean your plan. This is a problem with this moving up. Right here, if it pushes off, you got to be out of the short, not a recommendation. If we push down, then we're coming back here. This is it's like a fulcrum of pressure, of volume. See what we're doing? So this is have your finger on the ejector button, because it could just explode right from here. So we're going to watch right here. This is like an over-under. This is now a variable high volume node. This is now the volume point of control. Right here is put your helmet on, because if we come up above here, then we're going to squeeze these guys out. If we can't get above here, then we have the potential to come here and down to this. That's this trade. Now the thing is, when you're developing an understanding of how the market works, you will develop over time. It's a if this, then that conditional process. If this is too high, if this, then that. If I can't get below it, if not, then what? Then counter rotation. If I come back to the trigger and I test it and I can't get above it, so if this, then that. If not, and this is a problem, if I don't get below this, then it's going to do that. So I know right here I have a very low risk entry, and then I have to clear this, and then I'm going here for my scale. Now, again, you got to operate in this range, and then my stops are under here. So let's see what it does. Is everybody following? Are you getting something from this, guys? Token trucks, on as far as how to get those high volume nodes, that's part of the cloud nodes. And these are exported off of my other software, Investor RT, that I use for my higher time frame analysis, and it has export capability for data. So I export it, and then it's Bookmap can read it. So these levels are coming off of Investor RT, and they update in real time, or they're static, like overnight volume point of control. Once the ETH closes, this thing doesn't move. VWAP is dynamic. VPOC is, the open's fixed. And, but these are all moving, and this also changes in real time, and it's measuring where the high volume nodes are. So I don't have to be looking over here. It just makes it easier for me, because I tend not to be a great multitasker. I want to look here, because this is where the rubber meets the road. So remember, this was the short. This is the scale. And now the helmet is on, and you are trailing or using a trade management process. Does that make sense how we do it in YouTube? Thumb up, please, in YouTube. And please leave comments or questions. Anything I can do to make this stream better for you guys, please let me know. Our goal in TraderLab is to make this the premier community for serious traders who want to build out the business of trading. This is about business. This is the business of trading. The sellers wimped out 1121. Where did the sellers wimp out? I don't understand. Tony, it's shorts only, unless you're a counter trend trader. Or your plan says get long. They're levels, Tony. This is a viable level also. These are all levels. These are short trades. If you put a trade on and it violates structure, you get out. The trade sets up again, you get in. unless you don't have a plan for it. If you're just a broad stroke trader, you'd be sitting here from the first short that was up the high of the day and you wouldn't be doing anything, you know? So notice the structure. This is trading in fractals. This is auction market theory. There's your seller. There's your test. If you get short against this one, pushes through, trade's over. I mean, unless you have your stop further out. The other way I look at this, if I'm putting a trade on against this level, where's my other level? It's out here. This is resistance. This is resistance. So it's resistance. Oh, take it out. Where's my next resistance? It's here. Next location, put the trade back on, unless it's not part of your plan. Not more complicated than that. What it is random. That's the part we don't like. Where's my stops? VWAP, mid, another target, trade management. So you're hanging out. There's nothing else to do. And you manage your trade. By the way, this is also another target. Now, will it get there? No clue. Will we come out the top? Maybe. Not my job to be concerned because I can't predict it. So I just follow the yellow brick road. Is everybody with me? How are we doing in YouTube? So this VWAP is a target. Now, here's the other thing about this, and we could go lower. This is where this trade comes apart. So, and it's what's very interesting about this. So you would have your entry here. You'd have your scale. You'd be risk neutral. This was the last location where it was too high, variable high volume node, and this is the next one. Your stop could be here or your stop could be up here. It's all up to you. It's not a trade recommendation. The trade, you'd be risk neutral. So the trade either fails here, which it might, because if this is too low, we're getting buyers at VWAP and mid. And they might be right. This might be the opportunity of the century to get long. Or they are mechanical buyers, regular retail traders like us who don't understand auction mechanics. And here's the thing about gamblers or whatever. The outcome of any trade is random. Many retail traders automatically, it's at the mid, I buy the mid. Or I sell the mid. Or I buy the VWAP, sell the VWAP. It's fine. Yet, they don't understand, or they're using their canned indicators. Oh, my oscillator crossed over, I get long. Or it's this or it's that. And remember, the gamblers get paid. This might be the trade of the planet. I don't know. Doesn't matter to me. This is where this trade fails, is right up here, because this was too high. You want to see now the behavior here. Let's watch it. There's my buyer right here. If we continue up, then the trade would be over, and that's that. Just one trade. So let's watch. Remember, too high, seller, test, short, potential reaction. You got to scale. This could be it, and we could go north, and that's that. This trade is going to be over, but this is the level where it needs to hold if it's going to go down from here. Otherwise, trade's over. It's just one way to kind of put the pieces together, Now, everybody has kind of a different fractal or time frame they operate in. I prefer not to be overly active because every time I take risk, it does not necessarily increase my probabilities for the same dollar risk. So if I get short up near the high of the day here, that's a much better trade for me than getting into this. I can trade this, but my risk, I still, by the time I enter, I'm running maybe a 6 tick stop or so. I got to get 6 to get risk neutral. So if the range compresses, I have to, in my plan, I have to stay out or I scalp, So this trade is over, Broker likes it. Hold on 1 second here. So it looks like we're just kind of ranging around here now. Let me just look around here. Yeah, there's so let's watch this. This is where our level was. Remember, for our short was this. The trade fails above here because that's what we leaned on. Remember, the high volume. There's our seller. Here's our test. Off you go. Now here we have our buyers. We come back. This is where this trade fails. Now, you don't have to hang out for that. It's up to you. I'm a little more proactive when it comes to trade management because it doesn't matter. At least I'm just saying personal preference. So if I'm in a trade like this and I see it come across, I'll be out of the trade. And that's not a recommendation. I trade in this. I don't think developing traders should trade because and the only reason is it takes really unconscious competence to activate quickly. If you're getting short here, it's no good. You got to really be getting short in here for this. And then coming back up here, you're trading into this microstructure, which is right in here, this volume. Notice where we come back, the volume. So now this is coming up. This is saying too low. If I push off, then the trade's going to fail naturally. If I push below, then I come back here. The trade's pushing off, so this trade's going to fail. So I kind of, just a matter of personal preference again. For me, I'm okay being out of the trade and then reassess it. If it comes back here. Now, the thing about this is there's stops now sitting here, right? Buy stops. The probability, I'm kind of one of those, the first time is the charm. Have you ever heard that statement? When it breaks and then it comes back, this is now has buy stops. So there's a reasonable shot that we're going to pop into this paper that's sitting above here. And this also gives you the warning Will Robinson moment. Are you guys with me? Does it make sense? Hold on 1 second, guys. I gotta move some stuff around. $52.71 is an area that I'm going to observe, I think. Let me just look a little further. Actually, a little higher. 71.72 is just that same old area up there. This. I'm going to keep an eye on this. See what happens. Kind of lost my chat screens here. Trying to find them. Get covered up. Okay, I'm back. How we doing in YouTube, guys? Please give a thumb up. This is TraderLab, and you're all invited to visit the TraderLab. It's like we're having a, how do they do that? Where they have kind of like open house. TraderLab's having an open house. I knew there was something. And you can all come to the open house at the TraderLab using the link in the bottom of YouTube. What you'll find in TraderLab is, first of all, it's a community of like-minded traders, serious traders looking to build out the business of trading using processes that you can reverse engineer and vet to align with your psychology. That is really what separates why traders cannot replicate what other traders do. It's because it's not you. So you got to bring you to the party, and then here's tools. So we give you a toolbox, 60 PDFs of structured trades, and a library of webinars. And then it's a process of development and vetting. And if you come to TraderLab, you watch the primer webinar first. It's got over, 28 going on 29,000 views. And remember, this is not a subscription situation. It's not marketed. There's none of this Instagram and TikTok and all that stuff. Look how we made $1 bazillion in 2 minutes. Let's get real. This is business. If you're interested in the business of trading, I invite you to come to TraderLab and take advantage of all the education, the library of webinars, and the ongoing support, coaching, mentoring. And by the way, the mentoring comes from many different directions. It's the collective leverage. We have many different traders in TraderLab. And I always suggest, if you're interested in TraderLab, what you do is you come to TraderLab and then you ask the participants in TraderLab, because everybody's different, with all different years and levels of experience, from novice to very, experienced. What have they gotten from TraderLab? And not only that, how is it contributed to their development? And, what are they doing now versus what they did previously? Not only the results, but when they came to TraderLab, what do they wish they did differently than what they thought when they first came there? They could do it over again in TraderLab. What would they do? Because if you come to TraderLab, you want to learn from others' experiences. You don't want to make mistakes that we typically all make, because we're human. We all do the same thing. We all think that we're going to take, there's 60 PDFs of structured trades. Let's take 5, 10 of them, and we'll become a whirling dervish. If you can't do one of them, you won't do any of them. And it's very hard for us to understand that we're in a highly competitive environment where the best of the best on the planet are looking to take our dollars. If you think you can just walk in anywhere, hang out for a few days, and then compete, I think that's more fantasy than reality. That kind of thinking is very good for marketing. Where say the only one thing you need to make $1 bazillion. No, that stuff has been going on since I started in the business. I started in 1980, and they were, at that time, it was seminars, because there was no internet and there was even no personal computers. So but you still had the snake oil guys out there. Well, now with the internet, everybody's got a microphone. Everybody's, can post anything, and I think it's more difficult. I thought it would be less difficult early on, with the internet and information, because I think information is good. But garbage in, garbage out hasn't changed from the days of early on in computers. You remember that? Garbage in, garbage out? Well, still a lot of garbage. And snake oil salesmen have been around as long as there have been snakes. You have to vet for yourself. So whether you come to TraderLab or go anywhere else, you've got to talk to the others that are in there. You got to ask them, what benefit have they derived? Trading is not for everybody. Nobody can make you a successful trader. Otherwise, we'd all do it. But it's not like that. It's very difficult. And the difficult part is managing yourself. So in TraderLab, when you create a trade plan, it is really conditional processes. You become the trading system. Conditional processes are, if this is too high, if this, then what? Then that. If this now is too low, we can do that. If it's not, we can rotate down to the other side and check this. That's what I know. If this is too high, and there's my absorption, buyers were absorbed. Now this, who can execute here, So this is not really tradable. I can read it. I have alignment. How do I get into this thing? And this is my obstacle. So I can observe the behavior. I don't have a trade I can execute. I can read it. So if I don't have room, I won't be able to take this trade, because I can't enter where I need to enter because of range. So I have no trade. But what I have is auction mechanics. The risk reward is something we need. The behavior of the auction is generic, you see. So if I know this might be too high, and there's my micro high volume, this is a shopping. This is like going down the street to your local store. You know, the little store where they have just a couple of items in the store. So there's not a lot of volume, but there is an auction. And if this price here is too high, then we'll come back to the higher time frame and check, is this too low? If this is too high, might be too low. If it's not too low, I come back to the next level. If this is too low, I can come back and check this out. That's what I know. I don't know anything more than that. I don't need to know anything more. What I need as a trader is range to make the risk reward work. If you sit here in front of your monitor, like many of us do, and we're all itching for to keep busy. Oh, let me pull a trade out of left field. No, what you need to do, in my opinion, is learn to read the music. This is language of the market. So what are indicators, by the way? Typically price-based derivative interpreters of market behavior. Price, typically, or some derivative. What is this? Volume and price. Because the volume tells us the shopping experience. And if the volume that took place up here is too high, we leave it. Then we can come back and check it. And if it's still too high, we will leave it. On the other side of that, this volume is for the whole developing day, the retail price. If it's too low, and don't forget, this is too low, then if this is too low, I can come back, and if I get through this microstructure, I continue higher. So think of this as resistance. This is stronger support than this is strong resistance. So this is a weaker structure because there's less volume than here, but it's micro. So let's just watch the behavior here. This is auction market theory. So we can see this here is weak. So let's watch. Now, I'm going to take you a little further into this. Now, what I'm talking about here are not structured trades. These are not. This is how you can keep track of what's going on in the market. This was too high. However, since I'm now above here, and I'm coming above here, this now is an outside edge. This is a low volume area. This is too high. Remember this volume up here? This is the big kahuna. This is where all those icebergs sold. So this is an important location, this high volume. So out here, if this is too high, I come back here. It's called mean reversion. No range. So I'm not saying no range, but here, let me show you. So this is not, now here's the thing about this, at least the way I think of this stuff. I might not be able to trade this because of risk reward, my ability to enter in a timely fashion. If I want to get short, I'll probably be getting short here. I got to scale here. What am I doing? You know, does this pay? There's your micro high volume. You can see it there. Here. High volume. Buyers, 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 buyers. Sellers took over. Right here was too high. This is now retail, and if I come under here, it sets all this up. Okay? How do you trade this? Well, maybe you can't because of range and entry, not because of behavior. The market operates as an auction, if you accept that. Because why do we have a market? It's to figure out what's too high, what's too low. Well, out here, you notice what happens when the price gets too high? The volume dries up. Remember, I'm not paying less buyers, less buyers, less buyers. Then what? Ran out of buyers. What happens then? Where do we come back? Retail. That's called mean reversion. Then the other side of this is where's the stops? VWAP in mid. So this is the same trade I've been talking about, like this thing, right? No entry here, up here, outside edge, back to here, and then you've got this and the stops. So this is kind of how this might work. Now, again, this is not anything you should do. In my opinion, what you should do, and it's just a suggestion, is learn to understand how the market works. If you can understand how it works, not what it'll do, because we don't know that, but how it works, you may be able to codify a process what I do is I anticipate these locations. I don't know what'll happen. So if I have a trigger that I can operate with, and at some point you need to really understand, can you read it? And can you exit here with a stop here? But you got to get here. That's really hard, right? Because you got to get risk neutral, job number one. Then here's what we know. Here and this. So for me, I'm looking for, first of all, that, right? Then this and down here. This looks like chop. But where does this trade fail? It fails over this right here. This volume right there. That's where see, this is your high volume in the microstructure. So what we did is we came to an outside edge. I'm not paying that, Lewis, and off you go. In the microstructure, this was the price that was too high. And now we're going to see when we return what the behavior is. These are not trade recommendations. So let's see if we can observe it. The high volume is there. They're pulling above, so they're opening the door. So the idea of this is, if this volume is too high and it's not strong structure, don't forget, we're going to come back, check it, and either take it out, and they pulled. So to me, that suggests that it's going to go higher. But this is resistance. But this is a problem right here. See this? So this is how order flow can help you. So we've got to see the behavior here, but the order flow is suggesting it's going to go up. So part of your trade plan might be, if you were short, which you wouldn't be, but let's just say, you were looking at this to sell it on a retracement, right? You see this, nada. Or you sell it here, you see this, maybe out. You see what I'm saying? This is how order flow, because this is saying that this seller pulled, it canceled. So for me, that might, and you have to vet this. This would be a reason to be out. Or if you got short here, to exit it, a couple ticks. It's up to you. Outside edge. See, this is your outside edge, but this is a problem. So let's watch this. Remember, trading's not about being right. It's about quantifying behavior. And the behaviors are locations to interact. And then what is a trigger? You define a trigger. You also want to define order flow in the sense of this pulling is just like opening a door. I consider it's like opening the hatch. It can now move up to here. Let's watch this. High volume, variable high volume node. 72 was that big number. This is a potential location, as you know, right? That's what the white line is up here. This is where this 3,000 icebergs went off. This is still a potential short. And then take you back here. So remember where this all came from. It was here, and then it was at 7. Yeah, it was here. And then there. So these are on the chart. That's the thing about this. Does this make sense, guys? Do you have any questions? We got about 5 minutes. So this is a structured trade in TraderLab. So let's just watch the behavior and its mean reversion. So the idea is we're trying to find outside to come in. This pulls, you got to get out of Dodge, not a recommendation. There's your absorption. These buyers were absorbed. Notice the liquidity in the book. This is where you're going. That's auction market theory. This is really TraderLab trading. Now, it's up to you, and here's where it is. Do you sell this to here? Do you sell this to here? Where do you trade it? Before the market ever gets there, you would have these outlined. You would know where they are, and it would be subject to your time frame or fractal. Some traders are going to be short from the high of the day, and they're on siesta. Other trade, and they take the whole range, and they're in here. Other traders are going to be trading these little rotations. So everybody kind of that's the whole point about the TraderLab. Once you understand market mechanics, you then kind of find your groove, your tolerance, your psychology. Some traders, if they're short and it does this, they're going to jump out the window. Other traders are going to have their stop further away and they're just going to ride through it. Everybody is different. And that's why, by the way, if you're interested in TraderLab, don't forget there's the link in the bottom of YouTube, and there's no cost to be join the TraderLab community. So you can leverage other traders' experience. We have some really great traders and great developing traders in the TraderLab. They've been there a number of years. TraderLab has been around. There's no cost for it. There's a lot of resources, not to mention a lot of additional no-cost education that Bookmap makes available. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, algorithmic behavior, market maker behavior, options, swing trading, etc. Much more. How to use different tools that to help enhance your trading. And the thing about it is, in trading, it's not like more makes it better. It's what is the least number of inputs. I used to think years ago, I built trading systems. I thought, well, the more I had in there, the more certainty I could create. Again, that was psychological. I had a belief system that was, if I believed that more was better. And my need for certainty drove my beliefs. And I didn't understand early on in my trading career. Nobody talked to me about it, and there weren't off-floor traders. All my friends were locals, on the floor, CBOT, CME, that as an off-floor trader is like being in a vacuum, truly. So I made assumptions that were not aligned with the business of trading. So what I figured out, and it took me unfortunately way too long, was that this is a random environment, and more creates curve fitting, less creates clarity and still randomness. So I stripped everything out. And if I have an input, it's a consistent input. If you think about how casinos play their games, they play them exactly the same way. Traders, we have multiple time frames. It's a little this, a little that, sometimes this, sometimes that, sometimes it's an RSI, sometimes it's the EMA doesn't fit, we'll do a 20 SMA. Maybe the EMA this time frame is that and this. It's nuts. What is that other than rolling the dice? You're going to roll the dice, sit on the house side of the table, is my suggestion, if you can. That's what TraderLab is about. Strip it down to its basic process so you can become consistent. If you are consistent, no matter the outcome, you can now measure it. You can toss out the things that don't work and embrace the things and improve the things that start showing you statistical edge. Casinos have done really well, and they still pay the gamblers and give you the cocktails and the ticket to the buffet. They do okay with that. Maybe you will too. Give a thumb up in YouTube if you got something from this today. Visit TraderLab. There's no cost for you to do that. This is what the PDFs look like. The link in the bottom of YouTube will give you access to TraderLab and all the resources, as well as a terrific community of serious traders. I invite you to come to TraderLab, see what it's all about, see what all these other traders are doing, and find out if they're just like you and if their experiences are not any different than yours. Also, be sure to ask them, what have they gotten from TraderLab? What was their biggest obstacle coming to TraderLab? And if they could do it over again, would they do anything different? You know, the idea is you don't have to reinvent the wheel. Let's get out of the rut. Let's just find what might work for us as individuals. That's why you need to put the time in to find out what resonates with you. And this is really different in the sense of it isn't just, do what somebody else does, not me or any other trader in the TraderLab. If you understand market mechanics and how it works, then you can put the pieces together and craft something that you can I think of it like playing music or speaking a foreign language or dancing. What's your groove? Find your groove, click the link in the bottom of YouTube, visit TraderLab, and give a thumb up. Look forward to seeing you guys soon. Thanks for visiting TraderLab.